I'm Brian Kilb, Executive Vice President of Landaas Company.
Brian, we've talked before about small cap stocks. They've been in favor lately because the domestic stocks have been rising and the international market hasn't been as good. And small caps typically focus more on domestic issues, right?
Well, the positive is that small cap companies, the smaller guys, typically don't do a lot of business overseas. Given the strength of the dollar itself has appreciated against the euro almost 20% since last spring, and to a significant degree against a basket of world securities. So to the degree you have that foreign business, oftentimes it's been a detriment to your overall profitability. The small caps have mostly avoid that trap by being contained domestically.
What about the valuations for small caps?
Now we're on to the con side of things, right? The bad news is small caps are pretty expensive right now. Even after a challenging 2014, the price to earnings ratio for small cap stocks is roughly 24. Compare that to the forward PE on the S&P 500 right now, Joel, which is around 17. You can see that there's a pretty hefty premium for owning small cap stocks right now. As a rule, I typically don't like to buy expensive things. I like to buy things cheap. I think the other thing you want to know about the small caps, Joel, is typically in a rising rate environment, it's more challenging for the smaller companies. The smaller companies that have debt, oftentimes it's variable debt, so as interest rates rise, that burden on the smaller companies can be significantly greater for the little guys than it is for the bigger guys.
What are the merits of having small caps in your portfolio?
Well, typically in the beginning of a business cycle, the small caps are nimble, the small caps are the companies that are able to move quickly and take advantage of rising economic tides. Debatable where we are in this business cycle, but we're somewhere in the middle to the second half when the large caps usually take over. You know, when you combine the fact that the larger companies are cheaper and we're in the second half of the business cycle, it would tend to make you want to think that maybe there's better opportunities elsewhere.
And you've pointed out in the past that small caps tend to be a little more volatile, and so they're not always appropriate for retirees.
It's a big roller coaster ride, Joel, and there may be a point in time for any investor where they're just not comfortable with the roller coaster ride. So consider whether it's worth making a teeny bit more for the extra risk you're taking. Most often people will probably not take that trade-off in their later years.
But still, they have a place in most diversified portfolios?
But again, nothing's for nothing. Make sure you understand the risk involved with the potential reward. I think earlier on in years, small caps make a good complementary position in your portfolio. I don't know that in the distribution phase of your investment life that you need to put up with that kind of roller coaster ride.